Hey folks, Gary Dean here with Sentiment Timing. This is our weekend video report for Sunday, March 8th, 2026. So the bulls are having a rough time right now. This geopolitical news is really a pretty heavy anchor on the bulls' feet right now. But there's reasons to believe that we're getting close to some type of bottom right now, and I'll show you why. But the one main thing is that we continue to see buyers step in at our accumulation. And again, that's taking it from our anchor here down at the 65.26 up to the 7,000 level. So every time we come here, we're seeing buyers step in. Now, I'm leaving the door open for one final flush down to the 66.40 area. And the reason why is we've just been testing this area and a lot. And usually when you hit the floor so many times, it's going to break. But I think this is where we would get some kind of spring forward type rally would come right here. And I don't even know if we have to come down here. We're towards the end of the cycle right here. And we're holding support. We're pretty oversold right now. So if we do see selling, then we're looking at a move coming somewhere down into the 66.40 down to the 66.24 level. So another 100-point loss from these levels. But let's take a look at the 60-minute chart here. And again, if we get a rally, this is going to be where the bears are going to try to hold it down, the S&P, and that's going to be our first distribution zone right here. That's going from the 68.32 up to the 68.60. If it can get above that, now this is where you really want to pay attention, because we also have the moving average right here that's moving. So this is going to be some pretty heavy resistance right here. But if it gets above it, then we're looking at the 60, right around that 6,900. So that would be the upside target. But if we start taking these out, then what happens is we have to start looking at where the targets are. So remember, this is where the floor, this is where the institutions are going to be buying. If they can get it through here we go, the secondary of on the 60-minute chart, then we start looking at our upside targets that are in play. Now, if they get held down here and we start moving down, then we start looking at the downside targets, 67.10, 66.70, and then the 66.18 level. So this is the beauty of this software right here is not only does it you can kind of build your trading framework with, this is holding right now, these are the upside targets, but before those targets come into play, we need to see the S&P take out the 6,900 to then start looking at those levels. So this is the main distribution area that the bulls need to get above. Now let's take a look on shorter time periods, and again, now we're looking from this anchor to this anchor, and this is our first primary distribution, 6,800 up to the 6,820. If we can get above it, then we're looking at the 6,850 level, and that would be our secondary right there. And if they get held down, these are obviously our downsized targets. Now we're looking for a GAN time an important level to look at. That's at 9:45 tomorrow. So we have to keep an eye on things, because when we see turns happen in or around this window, it should take us to the next window on it. So this is the short-term resistance right there. You can see we do have some bullish divergences on the 15s, and let's take a look at the 5s now to figure out where's short-term resistance. And again, that's going from this 68.30 down to the 67.11. And you can see this is the beauty of this software, is it's telling you where institutions are, where the distribution level is. We ran up, pulled back, ran up, pulled back, and every time we came into this level, we just saw sellers step in. So we know that this is important right now, and this is what the bears are trying to defend. But let's see where the support is, and if we take a 1-minute chart and look at it, you can see. So we kept hitting our head on this on our resistance, came down, it took out our primary, but then found buyers at the secondary, and we had some decent buy signals in place, and And from there, we saw the S&P rally from the 67.25 up to the 67.46. So 20-point rally, if you're trading futures on that, that's it's a fantastic trade. But that's really just keeping an eye on where we are. So let's go to IWM, because this is actually this is a new indicator that we're building right now. It's going to be a standalone. We're probably gonna combine it with some other things, but it's basically what it is buy and sell pressure, and it goes off of are the sales, are they being taken out at the ask, or are they getting forced to sell at the bid? When you're buying, are they buying at the bid, or are they buying at the ask? And that's how this indicator works. So it's really like a money flow type thing on where these are, where shares are being traded. Because if we start seeing selling at the bid, it's telling us that people want out. They don't want to risk it of trying to get out at the ask. So typically when that happens, we have some type of reversal. Like here we can see that we are in a pretty good buy on it. As soon as we started rolling over, that's where the sell signal came in, and we saw IWM have a good drop from there. But now this is a divergence that's going on where you can see there's a lot of buying as IWM has been falling, and we're right into our accumulation zone. So the thing is, what we're doing real quick, a little bit of an advertisement here. Anybody who purchased the software already, or purchase it today, you're going to get a separate file. We don't have these in the files right now that you would receive, but I'm going to give you this indicator. Basically what we're doing is sometime next week, I think we're going to make it as a standalone so you can add it in, and it's going to be $100. It's not going to be anything major, but it's a great way to see what is going on with the markets. Now, what also happens is you start seeing these purple bars right here. What this is telling us is that as when we're up here, sellers are selling at the bid. They are not selling at the ask. So it's from that, it's a warning sign. We came, and then once we got into the greens, this is where we saw IWM go without any really pull back at all on it. And then once we started seeing these cayenne bars, what it's telling us is buyers are buying at the ask on this, and they're not, and sellers are selling it. Even though price is going down, this is what's happening. They're buying at the ask. So it's a divergence that's taking place, and typically this is what happens. You get nice moves off of that. And again, you really just want to combine it with your with figuring out where the buy and sell zones are. So here is, hang on one second, let me do this. So let's do this. Take a look at from the anchor, we're using from this high to this low, and you can see right here, we're looking at our distribution at the 258.80, and this goes up to the 261. If we take a look at a lower time period, 258, 260, and that's going from which anchor? I think it's this anchor here down to here. So these are the first areas we got to keep an eye on tomorrow when they open. Most likely we're going to get a pretty good idea, but you can see we hit the max low right here as far as selling. We had the drop, and from there we have a pretty good divergence going on. Now, same thing here. You can see price moving up, and you can see money flow is moving down. So it's a really good type of indicator to see what's going to happen before. So again, I think the bulls, they need to get it above this 258.30 level. This is really the line in the sand, and until we see them take it out, we got to be pretty careful right now. So let's take a look on a 5-minute chart to go and figure out where's shorter term resistance. Okay, so let's use our anchor from right here. This is the 257, and we have about 80 bars. So delete that. Let's put it in, and should move down a little bit. 80. So that's our anchor is 80 bars, and here you can see. Let me move this off right here. And you can see we're right. This is the resistance area that the bulls need to get through. This is the first one, 253.50 up to the 254.30. If they can get above it, the secondary is at 255, and it will most likely close that gap. But the small caps, they pick a direction and they go. That's about it. There's no other way to put it, because there was a little bit of buying on Friday, but each one of those buying sprees were getting hit with sellers. So it was not really a great day for the bulls. So anyway, that's tomorrow. Let's see how the market opens. Again, the geopolitical stuff is definitely a heavy weight on the bulls. Again, anybody who buys this software, we're keeping it right now. It's at the $2.99, so that's discounted. And I will send you this our money flow or the money flow indicator, and I'll just send that in a separate email to you on that. So make sure you take advantage of it, because this is going to be a standalone where we're going to be selling it for $100 lifetime. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.